prepare to kick off another week of earnings, we have interesting signals for MGM Resorts. Tonight will be a great display of using multiple signals to forecast possible future movement. Hello everyone, I am the Stock Signaler, and I have built multiple algorithms and set up backtesters to determine likelihoods of future movement over the next 10, 25, 50, and so on trading frames. Tonight, I will discuss two trading signals that recently triggered that have been capable of forecasting future movement. Before we begin, I will quickly walk through the anatomy of a signal. So the signals that occurred are here at the bottom. The first one is this red back painted line, and the second signal is this green painted line here in the bottom portion. Now to walk through the anatomy of a signal, I'm going to go back here to another signal that happened on 27 November, so you can kind of see how it plays out. Basically, the signal is triggered on the closing price for the particular bar. So in this case, when the market closed on 27 November of 2023, it was at 40.05, which is roughly where my crosshair is now. The signal is bearish. Basically, it's saying, hey, the stock will trade down from this point forward over the next 10, 25, 50, whatever. At some point, it's going to trade below the closing price, normally within the first 10 days. And then I have the statistics to back up, how many times it is successful within 10 days, 25 days, 50. Most of the time, the stock has moved as expected by the 250th bar, but we try to look more short term. So in this particular instance, it closes right here, and then it's supposed to move down, which it basically does. And then afterward, it kind of moves up. Now, the other piece of a signal is what I call a delay. Instead of a stock moving down as it's supposed to right away, sometimes it may actually continue to move up a little bit further before it moves down. Now, an example of this would be this additional bearish signal from 15 December, where at this point we close and we're supposed to go down. Basically, we're supposed to go down from there, and we didn't. We actually went up and then we came down. So the delay period would be when we go up here. So we find the peak about right here, and then we finally come down at this point. So this would be successful, probably not in a 10-day time frame. If we take a look how long this was. So day 10 was here. I would call this a failure in 10 days. It did not actually cause a downturn, but by day 25, which was over here, we had actually successfully gone back down. So this is a good instance of what a delay looks like, and then how a 10-day can be a failure, but a 25-day can still produce the data that we were looking for. All right, so what we're going to look at this evening is our first signal. It is my original MACD overtraded signal. We did get the bearish one. This is the one from 31 January. And we've had 264 prior occurrences of this. Our success rate is found here in the next 10 bars. So within the next 10 bars, we drop 95% of the time as expected. And 3% of those successes actually have a delay. Looks like we delay at most up to about almost 3%. Over 25 bars, we are slightly more successful at around 96%. And then you can see as we go down to 50 bars, 100 bars, and so on, our rate gets better, and our delays actually disappear as we go on too. All right, so let's look at the first chart. Now how this works, we'll look at a 10-day. Okay, so the stock is moving in up to our signal. Our signal happens here at the close, 43.37. And basically our next target after this are the two large green boxes. That would be our bearish zone. Now the largest green box is 100% of where the stock ends up trading. That's where the low happens after the signal, considered a success. The smaller green boxes where 50% of that trading is actually contained, and I normally use that as a good target area. Now, just like I was talking about earlier, we have our delay zone. In this case, our delay is the red box. 100% of all delays occur in that large red box. And you cannot actually see the 50% red box in this case because it is contained in day one, most likely. And that's so 50% of the time it falls in day one. As you can already see, we've gone 2 days and we have not come downward yet. So we're continuing to move up. If the signal is to be successful this time, we are still in the delay zone, and at some point in the future, we should move down here below 43, probably below 42. sometime before looks like the 14th of February. Now, what does this look like on our trading view chart? So we'll come back here and we'll plot it. And I've already got them plotted out. I'll just turn them on. So our delay, which we're already in, as we saw in that last chart, is plotted out here. The top of our delay typically is 44.58. And the bottom of our delay is 43.42, which we've clearly gone into. Now, our target for that drop is this green box down at the bottom. Now, we have not made it here yet. So ideally, if things are to hold true as expected, we closed here, we go up into this box somewhere, and then we move down here. That's what we're expecting if this signal holds true, and so far we are in the delay and we have not actually gone down yet. So that's the anticipation. But we have another signal which is also great when we have competing signals, because we can actually get a really good idea of some up and down movement and really play this out pretty well. So on 2 February, we actually got a bullish signal. So basically the close on this day, which was around 44.88, says in the future we should continue to move upward. Well, that's great if we didn't have this bearish signal that we're still trying to prove true. This is the my original multi-time frame conservative algorithm, and we have 87 historical results. We come down and look at the successful table. Over 10 days, it's successful 95% of the time. Over 25 days, 97%, and by day 100, we are 100% success. So by the 100th day, we always move in the direction that we called for. In this case, with MGM continuing to move up, I wouldn't be surprised if we moved up fairly quickly. Now, this one has a very strong delay rate, which is great, which can still validate our other indicator that we had. The delay rate here is almost 63% of the time. We actually go down before we go up. So what does that look like on this chart? So we'll zoom into our areas of interest here. Once again, we have our signal 44.88 on 2 February. If we go into our delay zone, that would be our red boxes at the bottom. Remember, 100% is that large box and 50% of the movement falls in that small box. And how this aligns with what our other boxes are, we'll overlay those also back here on TradingView. So I'll plot the delay first. So the white box, our original white box, was the current delay when we're going downward. The large green box is our target for the downward. Now, when it comes time to our other indicator, our delay says, hey, we should end up in this yellow box, and then we should move up to our final mark, which is this light blue box, well up here. So this is interesting. And I will plot out what we're expecting here. So signal, our first bearish one, but we went into a delay. So far we've delayed up to here. And then at this point we get a bearish signal. I'm sorry, we get a bullish signal on 2 February. But then it has a 63% delay, which means it'll probably come back into this yellow box as it's supposed to. Well, part of this yellow box is also the green box we're still expecting to target. So we're looking at a low beneath 43.35 or so, and above 42 between 5 February and 12 February. So this kind of gives us a really good zone to shoot for, so we'll probably come down here. And then after that, we could go up here into our larger box, which is our final target zone. And this begins 8 February and it goes all the way to 5 March. So ideally, what we could see is up, down, up action, and that's forecasted all from just 2 signals based on historical precedent. Now, where's it going to go after this? That's not really what I'm looking at here. One of the things that is working against MGM currently is this resistance line. It popped up a few times back in July of 23 and then back in, I think, 2021 as well. So that could be a hurdle for MGM later on. That's not what we're looking at right now. Today, all we care about is this possible up, down, up action. Thank you for viewing, and hopefully you can subscribe for continuous content moving forward.